Hey guys, per usual, everything on this channel is for educational purposes only and is not intended as financial advice. So I wrote a massive article on Medium. If I go through the video and you have no idea what I'm talking about and you have an interest in learning more, check that out. Per usual, wrote an article about Bitcoin this week for Brave New Coin. Check that out. There's going to be a podcast coming today or tomorrow, so the 25th or the 26th. If you're interested in that, and the only reason I'm putting out so much crap is because there seems to be an appetite for it. So let's get to some charts. Let's take a look at the Wayback Machine. This is December 29th. We talked about Bitcoin leaning bear, and looking back on this today is super interesting because the target hit after the stop loss hit. So what this is a head and shoulders. It's a classic reversal chart pattern. You get a horizontal level, a higher horizontal level, and then typically a level matching the previous horizontal level. So head and shoulders, okay? Shoulder, head, shoulder. Throughout this, you're getting a declining volume profile, descending volume profile. Everything was there, perfectly set up. You also have this neckline, okay? Just like the neck on your head. And yeah, this went way below that, but it pulled back up. I exclude stuff like this for chart patterns normally. If you don't like to do that, then don't do that. Don't tell me in the comments that I'm wrong about my chart patterns because it goes below the neckline. Okay, just a little salt there. So what I'm saying here is for the head and shoulders, the shoulder is the stop loss for the chart pattern. Okay, so what's going to happen here, it's actually going to break this horizontal, then break the stop loss, then break the target, which is pretty interesting. I wish this wasn't here so you could see this better, but you don't see this often to get a massive fake out and then actually hit the target 98.31. I don't really know what to make of that other than it's just interesting. It sucks that that happened because it was a perfect setup here. You know, people may or may not have sold, including myself, expecting it to go down and then rebought. They got trapped and blah blah blah. Like it's just a mess. And it's interesting. It actually ended up hitting the level anyway. This is a level based on not only the head and shoulders chart pattern, but there's a ton of wicks in this area. So this is the 12-hour. Ton of wicks here. It makes sense that it's kind of just chilling still at that horizontal level. It's also the 10K psychological support. So by psychological support or resistance, I just mean people have a tendency to place orders around even numbers. Next, let's look at this pitchfork. So I made two pitchforks saying it's either going to bust up or it's going to sort of bust through this median line and reach for the top of here, and it kind of did neither. So what happened for this one is it busted up saying it bullishly invalidated, then it actually came all the way back down to the median line. So we're kind of swimming in this pitchfork. This is a pitchfork with anchor points January here and here. Okay, so this says based on the mean of the trend, the bull trend, we are fine. Even if we drop below 7K, we'll be fine. Okay, based on the trend from 2017 that held the entire year. So we're right where we should be considering that trend. Yes, it's lower than 30K, okay? But based on the mean, it's fine. And you're going to hear me say that throughout this video. So you can see the Adam Eve bouncing right on that median line, which is what you want to see, in my opinion, for continuation. Now, if it consolidates here and breaks the median line, it's going to test the lows, likely well below 10K. I'd assume 7.5, 8.5, something in there. And as far as this one's concerned, you can see broke the median line but could not break this diagonal resistance, and then it just pulled back. It's actually still in this should you want to add a 1.618 extension wing to this. So this is a 1.272 here, and those are just numbers from Fibonacci extensions, so they make sense to me anyway. I don't know if that's like the rules for pitchforks or not. I don't care. Whatever fits the data is what I'm going to go by. So let's get to some other charts. Let me zoom out a little bit. So this is the idea that, you've heard me say this before, quarterly stuff happens, okay? It's either going to go up or down. Near the quarterly time points, it's either going to be a top or bottom, and it typically wants to go up no matter what. Okay, just because we're in a bull trend. So what's the trend? It's bull. What's going to happen on the fringes of the quarters? Volatility, a top or bottom is going to happen. You can see we're not even halfway through the current quarter. So in the back of my mind, as I'm looking at all this stuff in aggregate, it tells me be careful being super sure about going long here. One instance where we had a top and then actually got an all-time high within the same quarter was here. So top, bottom, top. This should have been a bottom, not an all-time high. It was a bottom for the next quarter. This was not a top for this entire quarter. We may see that here, where we have a current top that occurred essentially exactly where it should have within the quarter, weeks rollover. But you can see the all-time high didn't occur again essentially till at least halfway through the quarter. There was an inverted head and shoulders here that pushed this up along with a flag, ascending triangle, whatever you want to call it. You can see we have the chart pattern, the reversal chart pattern here, the Adam Eve reversal. Again, not too concerned, but it's a little early to just go up from here. It's got several days on it. I'll show you an example of why I think it does, but it's got several days to figure this out. It's in no rush, nor should it need to be. It's at the mean, okay? It's chilling. As long as there's no momentum one way or the other, it's just going to chill at the mean indefinitely. So it's going to be kind of sideways up at this point. So the next all-time high, this isn't a horizontal zone of resistance. I'm just saying like these are the dates that I expect stuff to happen as far as a new all-time high. So at least halfway through this quarter, up until like a week after the next quarter, which is June, July, basically, based on this previous, this goes back to 2015. I'm not showing that, but the point is this is the range of time I expect a new all-time high to occur if the trend is going to continue, which I think it will. So here's the daily 5200, the gold standard. Okay, it's so much so the gold standard that people call it certain names. So this is a golden cross 5200 bullish cross. You can see we have not had a bearish cross this entire time. Makes sense, the trend is up. Not only is this showing you at that time that we're probably going to go up, but it was actually pretty early considering you could have gotten in at the break of the 200. You can get in at the cross, which would have been late, considering if you're not looking at the right side of the chart, you're saying, oh, I'm in at the cross and then I pulled all the way back. But what I'm going to tell you is a different EMA strategy. So you get ready, get set, go. Get ready is breaking the 200. Get ready is breaking the 200. Get set is the cross. Go is the retest of the 50. And I'll illustrate this on a different chart. But overall, this entry has been solid. It's bounced on the 200 every time. I've said that over and over again. No concern here. It's certainly bounced higher from the 200 the past 3 times. This can go lower. If anything, it's going to stop at the 200. It's going to pause here. It probably will not just blow through the 200. If it does, there's greater problems than price. There's something going on, some event that's causing that. But overall, if it is gonna drop, it's gonna pause around the 200 again. It might overshoot it and then come back. But in general, that's where support is. So again, it's above the 200. It's bullish. Period. End of story. I've seen plenty of articles saying this is a bear trend. We've started the bear trend. It's the beginning of the end. You can say that. That's fine. In my opinion, it's way too early to call that just based on the daily 200. End of story. Like you can't debate it. Look at anything else. Same thing. Bull trend, bear trend. End of story. Objective. Yeah, we're in a pullback. Yeah, this is like a micro bear. We've seen that every single time and every rise up. So this is nothing new. So this is a weekly cloud. Again, bouncing on the Kijun, exactly what you want to see. It's at support. I'm not going to sell support. I'm going to buy support until that doesn't work out. And this might be the time. This might be it. This might be the end. El finale, okay? But you can't expect it to roll over until it does. That's just the way trading is. If you're expecting this to roll over every time it's bouncing, you're going to have a bad time, okay? You're going to be selling at, 500 or whatever else these targets are, and you're going to miss all this. Trend is your friend till the end. It looks grim. It looks it's teetering, okay? It's on the plank. It's walking the plank right now, but it has a chance. more of a chance than anything else as far as continuation is concerned. The other thing I'm looking at is RSI here on the weekly. I mentioned this before. Since 2015, it's held above the 50 on the RSI. Every time it's touched the 50, it's essentially reset the momentum for the bull trend. It needed a reset desperately as it was peaking here on the RSI. I think this is the second highest ever recorded, this being the first highest, the highest ever recorded, something like 99, this was like 98, whatever it was. Just ridiculously absurd. Just surging bull on the weekly. So yeah, it needed to come down in that respect. These can't just go up forever anyway. And what the RSI is showing you is that it's basically, again, back to the mean, 50. It's actually held a little bit above the 50, like 53. But until this breaks, you can see all this is the abyss, that is the bear trend that has never occurred. You know, this is bear, very clearly. Claude can tell you that as well. This is bull. It's not there yet. This is the bear trend, okay? Again, just to follow up on the 200 stuff. So here's the weekly again. This one's on Bitstamp. So I don't normally talk about oscillators and volume, but I thought this would be a good time to do that. So again, here's the RSI. It's bouncing on all these 50s. These bounces tend to occur exactly at the support retest, okay? If you look at stochastic RSI, which is a little faster than RSI, it has crosses within it. These crosses are lagging every time on the either support or the resistance tests. So there's either going to be a wick, there's going to be a tweezer top, wick, tweezer top. There's a wick here, I didn't illustrate that there, but another tweezer top here, tweezer top here, wick, wick. Okay, so these are all reversal signals that something's going to pull back. All right, you can see that the cross, again, lags the support test, lags the RSI test. So what are we waiting for here? We're waiting for that cross still. This makes me optimistic. Again, we're not like at the top of the stoch, we're at the bottom of the stoch, waiting for that cross. RSI says we're near support as well. And the other thing with stoch is you're waiting for not only the cross, but a breach of the, I think this is the 20 here. Sometimes the cross occurs on the 20. So it can cross and then recross and just like range in this zone. As far as I know, until it breaches that level, you know, that's when you can call it bull again. The 50 is a little less relevant, in my opinion, on stoch, but I'm just adding that to the chart. The other thing is volume. So what I'm seeing here is levels of volume almost irregardless of price that we have not reached at this point. And you can say we never will because that would mean like multi-billion-dollar volume at this point. So this was at least 400K. So 400K times 30K, whatever that is in dollars. Are we ever going to see that volume in 1 week? Sure, why not? I don't know. The point is that these have all been the trend tops or consolidation tops, okay? This is the top of the trend. It went bear. This was the bottom. This was the end of consolidation. So what you'd expect here based on previously, which may or may not happen again based on the absurdity of the math of that, the volume may never ever reach at that level again. But if it does, you can say, then again, there's probably a likelihood that we broke the trend. I can certainly see a red volume here in this 400K per, 1 week of 400K of selling, 400K Bitcoin of selling. That could easily happen. As the price gets cheaper, it's easier to sell more and more. It's harder to buy more and more as the price goes up, just based on the money influx. Certainly possible again. The other thing is if we break this range of volume, that would say something as well. So if there's a huge green volume here, that says we're off to the races again. We'll see if that happens. Certainly these were, let's see, this was the week before. It's hard to really line this up. It's hard to know what the correlative effect of this is, but you're looking for volume to match or exceed the range, basically, as far as anything. That'll probably be a lagging indicator anyway, so we'll see what happens. So here's a falling wedge, which is a bullish reversal chart pattern. This is on the daily. This is not on log. All my other charts are on log. This is not on log. Before you say, Josh, those candles are above the diagonal, that's not a falling wedge. Again, I don't care. Like, you can say that and you can tell me in the comments and be angry, but I'm going to say, look, it's there. It might not play out. The fact that it breaks this diag here says it's less likely to be a falling wedge, but I'm going to draw it. The support's there. You know, these wicks break this. I'm still going to draw it. 10 times out of 10. Same thing with this. This is less of a case for this descending volume here, but another thing you want to see with chart patterns every time is descending volume, just says consolidation. Then as far as Fib extensions, we're looking at 28K if this is real. So that's off log. On log, it looks like this. This is a pitchfork you can't see. This is the 1.272 extension. Well, you can't see the anchors, but it's very clear that there's a descending volume profile here, in my opinion. And it's very clear that we're breaking that diag, at least starting to. Again, targets 28K to 33K, something like that. That's what you're looking at for, this is quarterly futures on OKCoin, but that's what you're looking at as far as the target's concerned. If this is real, if the pitchfork holds, if we survive the Adam Eve here, that's immediately going to be my target, as it has been for a while. So here's that Ema strategy again. This is a 4-hour, and what I'm looking at is the 50, the 200, and the 850. So since pre-2017, I even think this has happened a few times pre-2016, but you get a support test, okay? Whether that is before or after the bearish cross, I don't care. Support test, support test, support test, support test, support test, support test, whatever. Okay, it just happens to be the 850. I don't care what it is, it's something. Then you're going to get a bullish cross every time to signal the re-entry. Bullish, 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 waiting on the bullish here. Then you get a retest of the 50, which really should be your real entry. So retest, retest, retest. Retest, that's actually retest of the 200. Retest here, hasn't happened yet. Again, this is like weeks away at this point, probably at least 2 weeks away, which I'm fine with. No rush, again. And one last thing, 4-hour cloud, you can see there's a massive support here. This is, again, the head and shoulders thing, back to that we are wanting to return to based on the cloud, bouncing down from the cloud. Certainly not bullish. I'm still optimistic. It's got some time. I'm not concerned. Like I said, trend is intact until it isn't. That's all I got for today. Like, dislike, comment, share, subscribe. Everything will be in the description below, and happy trading.